Recording has started. Okay, Dami, tell me a bit about yourself.
Yep, 23 years old, multidisciplinary entrepreneur. So I run a marketing agency called Clientele Boosters. I also run a production company called SAAS Central. And yeah, I love to learn. I play basketball at a high level, so I like to make sure I'm always chasing my potential.
Fantastic. So, in terms of talk to me about what you think about. I believe you are Gen Z yourself. So, talk to me about what you see. What is common with Gen Z's behavior and personal finance, and do you see any generational difference of how Gen Z's think about money and how the older generations do talk about money?
Yeah, I think you're right. You hit the nail on the head. A lot of the former generations before Gen Z, even millennials to an extent, talking about money was almost taboo to an extent. You might not necessarily discuss that at the table, like politics. But I think with Gen Z and even leading to Gen Alpha, which is after Gen Z, because information is so accessible via YouTube, TikTok, Facebook, and all the other social platforms, um, once people leave high school, they're encouraged to kind of explore more entrepreneurial leaning ventures, have a side hustle, they say on LinkedIn all the time. So I think when other means of income are encouraged and impressed upon Gen Zs in this generation, it almost opens them up to a conversation of what business are you trying after your 9 to 5? Or have you tried an e-commerce store? Or are you saving money to start your own, cafe, that kind of thing. So I think there is a growing, just kind of openness about talking about finances. In the same breath, I also think that Gen Z is probably one of the most financially unstable generations at the same
Mm.
time, which is a bit ironic.
Oh, that's very interesting. Unstable. Okay. So tell me about what you mean about Gen Z being unstable with money.
Well, I think there's a few factors, some that are out of the behavioral control of things. One being obviously we're in a recession or leaning into a recession, but we're in one. But at the
Mm.
same time, things are becoming more expensive with inflation, right? So the average household would be ridiculously more expensive for someone 5 years my superior at 28, 29 compared to their parents when they were buying their first home in the 80s or 90s. So when you couple that with, again, that entrepreneurial spirit, there's two ways the entrepreneurial spirit can go. One, it can really help you work harder with your job or your university or whatever skill you're learning or your trade, so you can eventually step up and maybe branch off with the knowledge that you have and build your own thing. Inadvertently, there's people that are so surprised and glamorize the success of the 0.001% of millionaire 20-year-olds or 20-something-year-olds. And as attainable as it is for some people, if they're not able to make 6 figures a year by 30, all of a sudden they feel like they're failures, and that kind of leads them to, in many places, give up. I think it's something like the average, and this might be a little bit off, but I think it's the average Australian doesn't even have, I think it's $5,000 saved. I might be a little bit off, but I definitely know for under 30, I think it's less than $5,000 saved in a bank account. And that might not be concerning to people watching, but you're only one or two emergencies away from being in financial ruin. So that's where I think there is a concern. Um,
Mm.
for people in my generation particularly.
Okay. So, what's the general outlook you think, like hearing among your friends or how Gen Z speak about money? How do you guys feel? Do you think there's a bit of confidence that things are going to improve? With the Gen Z's financial situation, do you think you guys are going to be able to afford to buy a house, or do you think your cohort are just a bit pessimistic about how things look like at the moment?
Well, in the topic of housing, I think there is a bit of fear purchasing. So those that may save up very quickly that 10, 20, $30,000 for a house, they kind of dump all that money in there, just to make sure that they've got that, that first house, that first mortgage. And I understand the incentivization behind that. However, I'm a big fan of multiplying your skill sets. I would rather, invest that chunk of money into learning more skills so you can buy 10 houses one day. But
Mhm.
On the other side of things, in terms of Gen Z financial behavior, I think they are also in a stage where, because things are more expensive, they're almost more open to collaboration when it comes to things like traveling to Europe, which is what everyone did last year, after that being the first year out of COVID officially, right, in Australia. So I think there's a slowly growing sense of collaboration
Mm.
amongst Gen Zs because of the undertone of financial, um, I guess, difficulty in a way. So I think that's very interesting, and I think that would be on the incline.
Okay, so if you, I think probably if you know a bit about social money, so social money is more about groups coming together to share, to share resources, in the sense that you guys contribute money, one person has access to the money, and you rotate it among yourself. So with just a little amount of contribution, you could access, more money from the group. By the end of it all, at the end of that term, everyone would have paid back what they owe. So it's a means by which people either share access, and it means to bypass borrowing from the banks in terms of credit card or personal loan. From the concept of that, what do you think about Gen Z's and community finance, or like group savings for items or for shared expenses? What's the psychology? How do you think psychologically Gen Z's would feel about that?
I think in fintech, everything is about timing and it's about user adoption. I think, what things like what's it called? Those pay later softwares, Afterpay, things like that, that came at a time when, a lot of people, particularly during COVID, but it was launched before COVID, but it grew during COVID because you see people that could not afford to buy their favorite retail good, and they can now pay in portions. So circling back to 2023, where we're in a recession, inflation at the same time. When it comes to my generation, if they are the type to kind of in a groupthink way adopt an idea, adopt a new trend together, I wouldn't be surprised if that also applied to their finances, because everything is viral, right? These days, everything is viral. If I like this video, my friend's going to like it. Facebook's going to retarget someone else that looks just like me in another part of the world. I think it's the same with your money. So what I mean by that is, if you want to go to the Maldives with 5 of your best friends from university, but accumulatively you have a net worth between the 5 of you of $15,000, well, perhaps it wouldn't make sense to go by yourself, but perhaps you guys could travel 3 countries together for 2 weeks. And I think that's the advantage of social money and kind of collective saving, especially if you can, and you can never fully bypass this, but I mean, there are strategies, but you can never fully bypass the bank. But if there's almost a way that allows you to keep it within that community and grow it together, it not only creates a sense of responsibility, but it also makes things more exciting. Like, guys, like, look at what we reached in January. We were only at this in June. So I can definitely see that being something that with time and with things starting to catch fire, I think social money is just going to grow more and more over the next few years.
Mm. Oh, interesting. So, let's explore a bit about debt right now. We know that a lot of we kind of getting to see that people believe that Gen Z somehow don't know how to manage credit cards or personal loans. Like some of them don't have any idea how much interest rates they have on their credit card, or some don't know that that your interest rate on your credit card could significantly increase if you make any withdrawal on your credit card. So, talk to me. Are there any what perceptions? So what do you hear? What do you see generally about how Gen Zs manage debt? Are they running away from debt, or are they getting into debt, or what's the situation of relationship with Gen Zs and credit cards and loans from the bank, like personal loans and stuff like that?
I don't think many Gen Zs are open, from what I've seen, to credit cards yet. Perhaps I'm just slightly below the age bracket where that would be viable. I think that's more for people with perhaps like families. They've got their first 1 or 2 kids under 5 years old. Maybe they want to put them in a private school. So that's now $2,000 a month coming out of their direct deposit, put it on a credit card. However, when it comes to loans, I do think that they are open-minded to finding other ways of financing things, particularly things like homes, particularly things like cars. I don't I'm not a massive fan of using debt personally. I think it incurs a responsibility that perhaps not many Gen Zs or even people in general are fully aware of, because at the end of the day, the bank is also a business. So I think that's the state of things. And I think most Gen Zs would agree with me that, particularly when it comes to the credit cards, they'd veer away from it. But yes, on the other side of the spectrum, where I'm different from, I guess, a lot, I do see many of them going to a bank saying, this is my deposit. Like, can I please borrow this amount? Not understanding that they've also got uni fees to pay off and a bunch of other fees. But I do see a lot of Gen Zs slowly, at least on a progression line, looking more into refinancing debt.
Into refinancing debt. So there's a bit of but do you think there's a bit of debt problem with Gen Zs at the moment? Like,
Absolutely. I think it's a huge problem. I think a lot of them don't understand the writing on the wall. I think a lot of them, um, due to societal norms, just do it because they think it's the thing to do without really taking time to think, how am I going to pay this off? What career is going to help me pay this off? Who can I perhaps collaborate with, whether it's via family or friend, to pay this off in a sustainable way? I don't think many people put that afterthought into debt.
oh, that's something. That's some insight there. So but generally, how do you see, so with community finance now, with a tool, an app, an infrastructure where you and your trusted friends and circle could, safely, assuming, pool money together and share resources. How do you think that's going to benefit you or benefit Gen Zs? And if you had that kind of platform, what would you generally use it for, or what would your mates use it for?
Yeah, I think, my friends would definitely use it just as a tool that allows them to unite over a goal where finances are involved. And that can be for a variety of things. It can be for a trip, it can be for a business venture, it can be for, perhaps something family related. Maybe someone needs some sort of financial assistance for a hospital fee that they cannot pay off. So I think, again, with how social people are on social media, this is just a secondary layer because it's finance. People are already using PayPal internationally. People are already using Afterpay. People are using Facebook Messenger to talk. If they're in business, they're using Slack. I can't see, like social money and being able to collaborate funds together being just the next obvious step when it comes to people collaborating online.
Fantastic. Thanks, Dami. Thanks for the interview. It was quite short. We just wanted to get some clip on your views on community finance, and but just one last parting word before you go. Can you draw? Do you think there's any relationship between the mental health of Gen Zs and their finances? Do you see any connection between Gen Z's mental health and their personal finances in any way at all?
Hmm, that's a really good question. I haven't thought of it like that. Um, Short answer, yes. I guess if I was to step it out, I think that a lot of, for a variety of reasons, not just social media, but even like the foods that are consumed in things these days and the overstimulation, I think a lot of Gen Zs tend to not have great control on average over, I guess, their emotional and physical well-being. So what happens is when you haven't regulated your emotional cycle, maybe you don't get enough sunlight, maybe you don't exercise enough, maybe you don't socialize with enough different humans. If you're always inside the house on a social media application, the levels of anxieties rise, depression rises because you're comparing your lifestyle to another person. Your eyes get used to a certain color of light that's not healthy for you. So what then happens is if you are making bad decisions in some areas of your life, it's going to translate into your money. So I definitely see that being a relationship, which unfortunately is correlated. And hopefully, I think if groups are able to unite and have a central goal, then that actually allows people to buy into something, which encourages them to refocus. Just like if you go to a focus group, if you want to read more books, you join a book club. If you want to play more sport, you join a basketball team like myself. I think it's the same with money. If you're part of a group, again, that group think in Gen Z, I think it applies right there as well in a positive correlation.
Yeah, thanks for that. I mean, thank you so much for articulating the thoughts of Gen Zs on social money, on personal finance, and also on community-driven finance as well. But yeah, thanks for your time today, Dami.
It's my pleasure. Thank you.
Yeah. Okay, I'll cut the recording here. How do we stop recording?
Should
I
be
think
bottom left corner or bottom right.
I've seen it.